Welcome back to Alpha Recap, your quick, clear rundown of the trading day. Markets closed, and we're unpacking what moved stocks, why it happened, and what to watch next. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Big day. A clear risk-off session across the board. So what really stands out here is how tech led the pullback and small caps slipped with it.
Exactly. To give listeners the snapshot, the broad S&P ETF finished the day down about 0.5%. The Nasdaq-focused ETF was down about 1%, and the small-cap ETF slipped about 1.2%. That combination set a pretty cautious tone. The day didn't hinge on one headline. It was a cluster of things. An earnings miss tied to the AI supply chain, some renewed regulatory noise around cryptocurrency, and mixed company results that split winners and losers across sectors. I mean, when you step back and look at this…
Right. And you could feel the market tilting towards safety. Tech and momentum names got marked down, while commodity and value-oriented stocks saw some selective buying.
Let's start with the tech story, because that's where today began to tilt. There was an OpenAI-related revenue miss reported, and the read-through hit AI-exposed software and cloud suppliers. Oracle, in particular, pulled back as traders focused on its sensitivity to AI infrastructure spending.
Yeah, that tracks. So when a big AI supplier misses, it raises the question, is this a one-off, or is it signaling weaker software spend more broadly? Traders chose to price in the latter, at least for the session, and that pushed the big tech complex lower.
Not a great day for chip and cloud names. The Nasdaq-focused ETF, being the weakest major ETF, showed how concentrated the selling was in growth areas.
Quick reaction? Wow, tech got punished.
Shifting sectors. Industrials and autos were a bit of an outlier. General Motors raised its guidance for 2026 and flagged a tariff refund of $500 million, and that helped autos and some industrial suppliers outperform on the day.
And UPS beat estimates, which was a nice bright spot for logistics and industrial sentiment. That suggested some pockets of demand are holding up, even with the broader caution.
Right. And the other thing is Corning, which had been running hot, slid after earnings didn't fully satisfy expectations. That felt like a reminder that momentum stocks can reverse quickly when results disappoint.
Honestly, I was a bit surprised by this one.
Consumer staples were steadier. Coca-Cola reported accelerating first-quarter revenue, and that supported defensive names. Basically, pockets of resilient consumption in a choppy discretionary environment.
And health insurance got some love too. Elevance Health drew attention for positioning that's expected to improve margins. Analysts are flagging favorable fundamentals around pricing and medical cost trends in that group.
Materials and mining were mixed, with names like Nucor showing leadership tied to AI-related capital spending and infrastructure demand. Utilities and real estate were more nuanced, reacting to nuclear and storage developments on one hand, and lab sector headwinds plus some big transactions on the other.
Short reaction, defensive pockets held up.
And we can't ignore cryptocurrency-linked equities. BTC-related flows cooled today, and regulatory scrutiny resurfaced as a watch point, which kept crypto-linked names and fintech names volatile.
Right, so what really stands out here is how multiple threads, earnings, crypto regulation, and sector headlines, all compounded into one risk-off day.
Let's take a minute to explain what long-duration growth means for listeners who might be newer to this. Simply put, those are companies where most of the expected profits are farther in the future. When interest rates are seen as staying higher for longer, those future profits are worth less today, so the stocks get hit harder.
Good call. From a Fed angle, the market's tone suggested a cautious reassessment of growth versus inflation risk. Analysts note that sticky or uneven economic data, plus mixed corporate signals, could keep a higher for longer bias alive in pricing.
Exactly. So rate-sensitive sectors like real estate and utilities can get pressured if traders start to reprice terminal rates higher. Conversely, cyclical and commodity-linked sectors may outperform in that environment, which we saw in parts of industrials and materials today.
Short reaction. Market rebalancing risk expectations.
Technical takeaways. Breadth was negative, meaning more decliners than advancers, and both the Nasdaq-focused ETF and the small-cap ETF underperformed. That signals a classic risk-off day where both growth and small-cap risk are being trimmed. Momentum indicators suggested a bump in volatility, so traders should expect a choppier tape leading into big data and earnings.
So here are a few things to watch next. First, Alphabet earnings. That's center stage this week. People will parse ad demand, cloud growth, and any AI monetization commentary.
Second, the upcoming inflation and labor prints. Even if they aren't blockbuster, micro details in wage and inflation data can swing positioning and Fed expectations.
Third, credit and treasury moves. A repricing in those markets will show up quickly in rate-sensitive sectors and small caps. And fourth, any fresh crypto flow or regulatory headlines will keep crypto-linked equities volatile.
Bottom line takeaways for listeners? 1. Today was a reminder that multiple narratives can converge and flip market leadership quickly. 2. Tech and momentum names led the pullback, while selected industrials, consumer staples, and materials showed resilience. 3. The Fed narrative matters. Sticky data could keep rates higher for longer and pressure long-duration names.
And 4. Expect elevated volatility into the next set of high-profile earnings and macro prints. Traders and analysts note that a few strong sector days in industrials or staples could stabilize markets if macro prints disappoint.
Quick reminder, this conversation is for informational purposes only. We're not giving personalized investment advice or recommending any particular buy or sell actions. Analysts note trends in market context, and any investment decisions should be based on your own objectives and risk tolerance.
All right, that wraps up our recap. If anything from today caught your eye, send us a question.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. See you tomorrow after the market closes.